Hello and welcome to the US CPI data preview from ATFX. My name's Nick Twido. I'm the Chief Market Analyst. And today we're going to be looking at the US CPI data. We can't look at the markets at the moment, as we know, without looking at the geopolitical factors that are influencing. And of course, I mean President Trump, and I mean tariffs, and I mean trade issues, and I mean how it keeps moving from left to right. But most importantly, this week, we've got some key factors coming up. And the biggest, probably the blue ribbon event of the week, is the CPI data out of the US. We know that the Fed looks at the PCE price index as probably its favored inflation data point, but the rest of the market, CPI is still king. We look at CPI across the rest of the world, and it can move and probably will move the market harder than that PCE data. The most important thing to look at when we're looking at CPI, we've got three key data components that come out all at the same time. We have the headline CPI number, that's a month on month. We have the core CPI number, the month on month. That takes away some of those volatile parts like energy, gives us what a lot of people and a lot of economists think is a purer number on where inflation's really going. And then we've got that big headline year-on-year number. So nice and easy for us this time round. The headline month-on-month and the core month-on-month is expected to show a 0.3% increase. The year-on-year a 2.9% increase. So any differential from that, and I like to think, a 0.1 will move the market. A 0.2 on those month-on-month will give us a real good knock one way or the other. And the same with the year-on-year, like 0.1 differentiation. We'll see some moves, obviously dead on, probably not so much. But a 0.2, so if we see something below 2.7 or 2.6 would really get the market moving. Above threes, again, the same sort of thing. A 3, 3.1, we're going to start to see dollar buy-in, yields go up, expectation of rate cuts come down, and obviously the inverse if the number's lower. So what we're going to do today, we're going to go and look at some of the charts and some of the biggest traded financial products that the market trades and that our clients trade. And here we are. I've gone over to gold. Right, this is the daily chart on gold. As I said, we smashed up to fresh new highs. I think this is the 7th fresh new high we've had of 2025. As you can see here, this is gold over the last year or so. February 2024, we were trading down here at these levels. See what I've got there, 1984 for you. February 2025, there we go, a high 29.31. That is a huge move. I think we saw a 27% increase in 2024. We've already seen an 11% increase. Now, a lot of this move has come since down here November, early November. Of course, this is when President Trump won the US election, when the red sweep came through, which enabled him to do, and the Republicans to do what they want now that they're in power. And let's be honest, they're saying that they are. Uncertainty, this creates massive uncertainty for the markets. And that has seen gold move all the way through. There was that previous high that we saw back there at right at the end of October in 2024. We smashed through there earlier in the year, and we're all the way up, looking at approaching 3,000. Crazy though it seems. Fortunately, people long in the tooth here, that's me, remember it breaking through 1,000 many moons ago, and we thought that was a little bit toppy. So I think for gold, the trading opportunity is there. The reasons for this move higher are valid. Uncertainties in the market, and even with this CPI number, we will get an instant reaction to the dollar move. But I think at the moment, you've just got to look at this trend. The trend's your friend. Look for levels to buy, and there could be some strong retracements. Right, we have a massive move. So the initial support is all the way down at 2,700. Really, you can see these lows here coming in. Guys will be looking to pick them up. And obviously a weaker number could see that uncertainty increase in the market, and we see gold accelerate higher, breaking through. And to be honest, when you're starting to hit these levels, you could look at FIBO projection levels, you can look at all sorts of things, but it's like once it's created a high, that becomes the next top level. You're going to be trying to look to buy breaks of that one. So that's gold. I'm going to move over to Aussie because this is one, and I've moved down to the hourly charts on these because if we're sitting around these levels, there's good potential for some moves. So a lower print for the CPI means we're going to sell dollars, we're going to buy Aussie. Now, Aussie had a really good move yesterday. It dipped down on those early tariff comments, and then it came straight back higher, and it remained bid for most of the day. And that's because those tariff comments also led to commodity prices, expected commodity prices to be increased. Australia is a commodity currency. A lower print, if you were trading around these levels, we're at 62.70. Trendline resistance comes in at like 62.90, that previous high at 63, and then if you see these previous highs here, 63.30, a solid break through these, which would come with a lower CPI print. So I'm thinking a 0.1, a 0, even a 0.2 on the month on month, and a 2.7, a 2.6 certainly on the year on year. Would see these levels break, would see this level break, and it opens the way for a nice move back up into these, up to the 64s, maybe up to 65. So good trading opportunity for the Aussie. Conversely, of course, stronger numbers, 0.4 on the month on month, 0.5 on the month on month, anything over 3 on the year on year would see this accelerate, this move, and we're in that downtrend anyway, and that's probably one where most people favor it. Would see this move accelerate, and we break swiftly down through that 200-day moving average, I fear. And then we'd be back here looking at challenging those annual lows. Moving over to cable here, this is back to the daily charts, giving us a little bit, we've moved back into mid-range. These are the levels that we're looking at all the way back here, at these lows way back in 2022. I'm going to bring this chart into a little bit more of an accurate level for us. And here we go. We're kind of in the middle of the recent range. It does fly about, cable, and it will fly about on these CPIs. So again, you're probably looking for a break trade on the weaker number above this 124.85. Let's move us along a little bit. We're probably going to be a bit lower if we're trading around these levels. 124.65. Support coming in around 121.70, and then you'd probably look for a break of that low down at 121. But as I said, if you're getting these 0.2 changes, even the 0.1 will make it move. Potential for massive move, especially for cable. Here's the euro. We're back to the hourly chart, a little bit more tempting to get in, and more of the short-term traders, they're going to get in, they're going to get out within that day. The daily chart, you're probably going to get in, and you're going to be looking to trade that on a more of a weekly basis. Euro, similar situation, sitting in the middle of the range. You'd kind of be wanting it to sit up here near a good resistance trend line, or down here near recent lows. So we've still got a few sessions. It could be near either one of those two. But once again, weaker print, we're probably going to come up here and challenge those levels. 104.40. That 200-day moving average, less important on the hourlies, I should say, but still works on a number of occasions. And then this support comes in down here. We're looking at 101.50. I think the previous low was slightly below that. I'm just getting it at 101.42. But that is a good level to target on the downside if we get stronger numbers. A breakthrough there does open the way, back to challenge parity for the euro. Moving over to dollar yen now, back onto those daily charts. I've been skipping about because I'm looking for these really good short-term and longer-term trade options. So longer-term, we've probably got to look at dollar yen. We've seen massive moves already. This move in the last couple of weeks, really, from this high up at 158.87 down to the low just a couple of days ago, just underneath 151 figure. That's a 5% move, or just shy of a 5% move. Massive moves for dollar yen. The trend is obviously back to the downside at the moment. So if you get that lower print, that 0.1, that 0 on the month on month, 2.7s, 2.6, even a 2, you're going to see dollar selling. And where we're sitting at the moment, the break trade there through that trend line support, through that low, opens the way for a big move. Obviously, 150 is going to be the initial target, but on this daily chart over a week or so, we could be entering 149, 148 big figure handles. So keep an eye on that. Obviously, the other side of the mix is stronger number. It will push us back up. 200-day moving average is more relevant on the daily chart. 152.75, that's probably going to be the initial resistance, but it could take us back up into the 154, 155 level. So trading opportunities there. So I'll recap what we've looked at once I finish up. I'm just going to take us to CAD, because we know CAD's been moving massively over the last few weeks on the tariffs and on the emphasis we've had. Got the daily chart here. Now, I've left that high in there because this was a massive spike when we got the tariff announcement from Donald Trump. It went up to 148. It's come back into this range and it's sold quite nicely, but we are trading at quite good levels on that daily chart. So dollar, if it comes in a little bit lower and it brings in that expectation of rate hikes, it could break through these lows and it opens way. We've come a long way, the CAD, in the last couple of quarters. It could open a way for moves back down into this range. And look, that 200-day moving average is all the way down at 138.75. Conversely, of course, stronger number back up. We're going to challenge that initially, that 146. I still think that level is relevant. And then it's 148, that massive spike we had on the original Trump tariff imposition, and then the pullback on that 25%. Don't forget, we're now 11 days into February. We've got a few weeks for more negotiations to come. So we will see geopolitical wrangling on those. So I think here, looking at these opportunities at the moment, I like the Aussie on the hourly chart because we're close to a trend line resistance, because we're like close to a former high and another high at the high of the year. Potential for really good trading. So that would be a weaker dollar number, takes Aussie topside. Sterling, a little bit less so. We're kind of back in the middle of the range on the dailies. A little bit harder, but a weaker print will probably challenge here. Stronger print will challenge here. Very similar story on the euro, waiting for it to pop back in. We are mid ranges. Obviously, we've got a few sessions. If we're near some of these trend lines, some of these key technical levels, then that's a different story. But potential to move, and the potential, I suppose, for these ones on that slight, on that 0.1, that 0.2 difference, then, you have got we've got a big figure and a half here. This is on the hourly chart as well, so it's not too bad. Same to the downside. So there is that room. There's no technical level to stop it. It could continue through. So good trading opportunities there. And then, like I said, dollar yen, I quite fancy this one as well. Similar to the out of all of them, the Aussie and the yen, I think, are probably my favourites. So you'd probably put a little bit more capital towards those charts because you've got those better trading setups for it. Downside is probably my favoured move to go with that recent trend. So 0.10 on those month on month, 2.7, 2.6 on the year on year, 2.8 will probably take you back to challenge these lows. Those, I think, are probably your best trading opportunities. So once again, thanks very much for listening to us today. It's a little bit of a longer one because we've covered a few of the different products, but certainly CPI, biggest event this week. We also hear from Jay Powell when he speaks to Congress. Expect him to probably be a little bit more diplomatic, political. That's his game. That CPI is hard data, and we will see moves off the back of it. Thank you very much from all us here at ATFX.